Hey everyone, this is Sean with Paycheck to Portfolio. I wanted to follow up on the YouTube voting and specifically margin strategy, how I borrow to boost income. So that's what this video will be about. So let's jump right in. I'm going to give a portfolio update this evening just to let you know how things are going. So Friday was another good day in the market. Essentially, if you go to complete view on E-Trade, this tab will show you how you're doing with your margin leverage included. So my account value sitting at 116,000 basically. My days gains were 2,100 or 1.91%. When you compare that against the S&P 500, it was at 0.7%. The Nasdaq was 0.52%, and the Dow was 0.78%. So obviously, we outperformed the markets again. If you click into the actual portfolio, this only shows the day's gains on the portfolio itself. It doesn't account for margin leverage. So that's why I started out showing the complete view there. But still, we outperformed regardless of how you look at it and how it's accounted for. Net account value, we're sitting at about 116,000 there. Total unrealized gains, 30,000. Again, days gains as of Friday. Close of market, we were at 2173. And market's been doing really, really well. If we check the estimated income tab, we're sitting at about 39,309. This ebbs and flows with the specific payouts. If you look at the next 1 month, the dividends are calculating up to about 32.94 there. And so happy with the way things are going. And I want to talk specifically about margin and what that looks like. And I wanted to start out using an analogy. The easiest analogy to compare margin to is a rental home. So imagine you have $100,000. If you buy one rental house in cash, you earn rent every month from that one property. Now imagine instead you put 20% down on 5 houses using mortgages or leverage, each worth 100,000. Your same 100,000 now controls 500,000 worth of rental properties. Each house brings in monthly rent, so now you're earning income from 5 tenants instead of one. That's essentially what I'm doing with margin. I'm borrowing equity, buying growth stocks, and dividend ETFs. And when you look at my balances, I'll show you kind of how that breaks down in my portfolio. So basically, the way that E-Trade does this is they'll show today's value, and then I have prior close. Obviously, I'm recording this Saturday evening. So it looks pretty much, it is exactly the same actually. So again, net account value 116. The total value, all securities, including margin, is 231. If you scroll down, it shows you my margin equity here. If you've been watching my channel, or if you're new to my channel, I would recommend you go back and watch my other videos. I always maintain my equity over 50%. That protects me. And I also keep put options on, which insure my account. My paycheck just rolled in as of Saturday. This will settle come Wednesday, and it will go right into my available for withdrawal. This is pretty low for me. I like to keep this number around 10,000. I've been buying heavily in the Cornerstone with the rights offering coming to a close here. If you look at my transactions, just to show you, I'm living out of the brokerage. I sold a covered call on McDonald's here because it jumped off its 200-day moving average pretty strong. So I collected about $250 premium there. My dividends rolled in here. So these are some of the dividends that came in weekly on Friday, and it paid down my margin here, which you can see transfer cash to margin. So anytime cash rolls in, it pays down the margin. Anytime I'm overextending past essentially what the cash roll in is, then it will flip that. It'll say transfer margin to cash. And so that's how I can kind of control the inflows and the outflows. And I track that on Simplify Quicken is how I track my inflows and outflows. Again, if you're new to my channel, please go check that out in prior videos. I show that, and I will continue to show that in future videos. Want to talk about a few other things. So essentially my strategy, if you look at my channel, I'm going to show you an image I put up here that I'm just going to keep referring to. My W-2 income comes in. It goes right into my brokerage account, as I just showed you with the $5,100 that will settle on Wednesday. I turn around and I buy dividend and growth assets. And then the gap between what my dividends pay me and what my bills are is paid on margin. And I just repeat this cycle over and over. And what's going to eventually happen is my dividends are going to pay my monthly expenses. If you choose to, I'll put a couple links and pin them in the comments. If you choose to be a member, or you choose some options I have here. So I basically have a free calculator here, which will show you my PDF and show you my blueprint. That's free. It includes a simple 5-year calculator where you can punch in your numbers and it will generate your 5-year plan essentially for your specific circumstance. You can schedule a one-on-one call with me if you would like, or you can join our membership here, which will take you to our Discord page. And in our Discord, we have some complex calculators. I'm just going to show you what that looks like real quick. So essentially, if you decide to join the membership, we have a complicated calculator that takes everything into account. You can type in your specific circumstances, your starting portfolio value, your starting margin debt, your W-2 contributions. This takes into account inflation rate. It takes into account your annual living expenses. It has a drip yield and then a non-drip yield. It gives you specific instructions here. It talks about dividend yields and what that looks like. If you follow me on YouTube, I often estimate very conservatively. So I'll say my returns are 25 to 30%. If you follow this specific blend, it's actually close to 47%, but I always estimate conservatively because I want to set people up for success. So quite frankly, these returns are quite a bit higher. And then it'll break it down monthly. This calculator will actually show you your gross portfolio value, your dividend drips, your non-drips, the interest you would pay, the cash after interest. It would take in monthly expenses with inflation accounted for. If you're going to pay down margin, your margin debt, your W-2 contributions, and your net account value, and you can go all the way down and see what that would do to your total impact month over month for 60 months. One last thing I want to show here is looking at my performance. Let's go back to portfolios here. So updating the performance just so you can see. This includes obviously growth of the account and dividends that roll in. So you can see year to date, I'm currently at 16% there. The S&P's still negative fractionally. The NASDAQ's negative 2.5%. The Dow's negative 0.79. And the Russell's been struggling the most at negative 5.8 there. If you look at 6 months, it's very, very similar. I won't go through each line item there, just pausing here so you have a chance to see it. If you go 1 year, it's more dramatic. Looking up, I'm about 42% there. Again, versus the S&P at 12, the NASDAQ at 15, the Dow at almost 7, and the Russell at almost 1%. If you go 3 years, again, you can see I'm outperforming. All the indexes have performed well with the exception of the Russell, and it's still doing okay. But you can see 68% there. So again, margin, I use it to cover the gaps. I continue to compound. Really just be thinking about the real estate analogy and how you can borrow money with a home equity line of credit, or you can buy a rental home and leverage money. And then you have home appreciation. You can pull out equity and you can buy additional income producing assets with that. I'm doing that just with essentially dividend ETFs, which you can see here again, that are paying me all these dividends. And let me just do one more thing before I end the video. If you go all dividends, and let's just go last 60 days, just so you can see what I'm talking about. These are like rental homes that are paying me back, right? So every time a dividend comes in, you can see some of them are dripped. I've gone heavier into Cornerstone here because it drips at the NAV, and then Goff, which drips at 5% discount to NAV. But you can see all the others that are paying me monthly, weekly, quarterly. And that's essentially how I'm compounding the account and I'm continuing the cycle. Thank you so much for joining me. Please feel free to reach out via email, reach out via comments on YouTube. And if you want to join the membership or set up a call with me, happy to help.